I don't know why the economists and really smart analysts like Karl Rove, for example, are having such a difficult time getting their arms around what's happening to the markets over the past several weeks and certainly the past year. As we are looking at a graph of the Dow Jones over the past 3 years, it's fairly obvious that we've had some growth and then we've had a steep decline. It's October 10th. Halfway through the day, the markets are already off almost 6%. If we look at the growth of the market over the past projected out 4 years prior to October of 07, the markets had increased roughly 50% in a nice steady line. There have been a few rocky points along the road. For example, right here in January 2007, we entered into what we all recognize as the Pelosi trough. Nancy Pelosi taking charge of the Congress on her side of the House right here at this point. However, shortly afterwards the economy got back on track, the nation deciding they can overcome this and moved the economy back in the direction that it had been heading all along. In fact, overcoming the Pelosi trough entirely in just the period of a few months. But along came, as we all know, the gasoline crisis, which knocked us off pace for a while, but nonetheless the American economy overcame that and moved up to where we were in October of 2007 at about 14,000. At this point, however, things started to taper off. What happened here? Well, coincidentally, this is about the time that Barack Obama entered the national scene as a possible presidential contender. In fact, right in here is where he announced his candidacy, and there was the possibility that he might actually be a strong horse in the race. The market in this case reacted like this. Very obvious decline to the news of that possible or pending event. Right in through here, Hillary Clinton ratcheted up her campaign, which had a stabilizing effect as maybe this is not really going to happen, but as Barack began winning through the Democratic primary season, the market was predictably responding with down, 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 down. As we all recall, towards the end of the campaign season for the Democratic presidential candidate, Hillary Clinton rallied and almost beat Barack Obama. And when it appeared that she could beat Obama, the market once again responded favorably with a very definite increase in optimism. However, coming over the top of the campaign season, it appeared that that wasn't going to happen, and in fact, right here is where she conceded, and the market reacted accordingly, with the consequence of Barack Obama becoming the Democratic candidate with a very positive and unmistakable reaction to that. The market continued down to the point where it appeared as though John McCain, the new Republican candidate, might actually beat Barack Obama, and the market stabilized right here. Through this flat place is where they were actually even in the polls. The market couldn't decide which way to go, not knowing which candidate might emerge as the winner. This uptick here, as we see, we all recognize as the Sarah Palin uptick. McCain, Palin were leading in the polls slightly, and the market was responding favorably. Until such time right here, where Saturday Night Live and the liberal press unmercifully started skewering Sarah Palin, at which point Obama started to lead in the polls, and the predictable, by now we should know what to expect, the predictable result to the markets occurred. As Obama increased his lead in the polls, the markets predictably continued their downward trend. As you can see, this is not new. It happens all along. So this is the situation that we're in at this time. As Obama continues, as we get closer to the election and Obama continues to lead in the polls, then this will predictably be the continuing result. I think anyone can draw their own conclusions from where this will ultimately end up.